right, today in this lesson, I want to break down how moving averages and critical levels literally guide me throughout the market every single day, right? If you're experiencing tunnel vision, right? If you're experiencing, right, uncertainty and you don't really have a good strategy or approach that you can repeat on a daily basis, you stumbled on the right video, right? So over here at HPT, I pride myself on a systematic, repeatable approach, right? I teach all my clients develop a systematic, repeatable approach that you can execute properly, right? Because execution's everything, right? People come to this game and they think they need to be the smartest person in the room. No, absolutely not. You need to be the most consistent, right? You need to be able to execute better than everybody else, right? You need to train yourself on how to understand your edge and consistently, repetitively execute it without any hesitation, desperation, right? Without being super eager, right? You need to be in control of yourself, right? So to do that, you must have a simple approach, right? I don't care who you are. Maybe it's just me, but I like simplicity, right? I like to be able to show up to the market and not have to do too much thinking, look at the charts and be like, okay, based off what I'm seeing right now, I'm going to put on this type of trade, right? So in this lesson, I want to break down what it is I do so that it could be that way for me, right? So first thing I'm going to show you guys, right, we're going to go over Friday, 9/6/2024, right? So we traded live this day on the Discord, and you can see here throughout the week, we've been getting a lot of selling, right? It's been pretty excessive. Let me pull up over here. Okay, so first things first, we're going to cover critical levels, right? Previous day high, previous day low, end of day, and open print. These are the four main critical levels that I watch, right? These are your pit numbers, right? They're very simple. They're daily time frame levels, right? And the reason why I focus on these is because I'm an intraday day trader, right? I trade in between the hours of 9:30 and 4, right? So I have to watch levels that contain high amounts of volume. Okay, well, which levels are those? It's always going to be your pit numbers, right? Once again, simple, repeatable approach, pit numbers, right? Always watch your previous day levels, right? These are the levels that contain most of the volume, most of the liquidity. Large money is going to paint the picture at this level. What does that mean? Right? So I want you to think of like the game Pictionary, right? So the game where somebody's trying to give you clues, right? They're trying to act out something and you need to draw the picture, right? And so until that picture gets drawn, you're going to have no clue what it is they're talking about, right? How the game works is they draw a picture of something and you need to guess what it is they're drawing, right? Hence the word Pictionary. So if we're trying to trade in the market and we're trying to make decisions, right, based off price action, we have to let price action draw, but not just draw. We need to watch specific levels to understand what the picture is, right? So at the pit numbers, we're going to see the market draw. We're going to see chart patterns, right? We're going to see break and retests. We're going to see double bottoms, right? We're going to see bull flags, bear flags, right? We're going to see all of that. But unless we're watching the correct levels on the chart, it's really not going to matter or hold the weight that you need it to make your informed decision, right? So always watch your pin numbers. You can see here we got end of day, right, which was the previous day close, and we got PDL, right? So number one, pin numbers. Number two, moving averages, right? So now that you have your pin numbers, you can start to understand which levels you're going to watch. Now you need to understand the direction of the trend, and not just the direction. You need to understand the strength of it, right? So I use moving averages to really understand the strength of the trend, meaning is it strong, is it healthy, is it unhealthy, is it chaotic, is it violent, is it steady, right? These are just a couple different terms that I use to understand how strong the trend actually is. So lately we've been getting this large rip here into the all-time high area where we had a seller come through and really push price down. We broke some bullish structure, right? And things got very bearish. Why do I know that? Because market structure. Market structure also is going to always paint the picture, right? Market structure, very simple. It's just a fancy word for the break and retest, right? The break and retest is how the market works. That is market structure. And the sooner you can understand that, the easier this game's going to become, right? So now that we have our pin numbers, right? Those are those blue lines. Now that we have our market structure, right? That's that break and retest here off 555. Now we're watching those moving averages to understand if buyers or sellers are going to control the trend today, right? And what's amazing and really effective about moving averages is they work on all time frames, right? And I want you guys to think outside the box here, right? What does it mean to me that moving averages work on all time frames, right? Well, once again, let's go back to our main objective, right? I am a day trader, right? You are a day trader, meaning you're trying to make money in between the hours of 9 and 4, right? So to make high probability decisions and good effective decisions in between those hours, we have to understand what's happening on the 1 hour time frame, right? Because most moves that are most beneficial and pay the best, right, they usually last anywhere from, let's just say, 10 minutes to an hour, right? Maybe 2 hours if you're really in a real trending day. But I've been trading a long time, and I find it's most effective for me as a day trader, not everybody, to capture moves in between 10 minutes and let's just say 2 hours, right? So with that understanding, I have to be super aware of what's happening on these larger time frames. Larger meaning above 30 minutes, right? Maybe 15 minutes to the 1 hour time frame. Those time frames are going to paint that picture. They're not going to give me the specific entry, but they're going to give me the bias that I need to understand so that I can execute properly on those lower time frames. Now, what really helps us on those time frames, right, those larger time frames, are our moving averages, right? Because we have to understand who's in control. Is large money bullish or bearish today? We can't move the market, only they can. So we have to be able to understand what they're doing at these levels. Are they bullish? Are they bearish? Right? Is the trend holding? Right? And then we're going to bring it back to what is the most highest probability scenario. That's going to be our trade. Right? So once again, we have our market structure. It's bearish. Notice this purple line right here. This is the 50 EMA. Right? I'm going to make it a little bit bigger just so everyone can really see it. I'm going to make it 3. There we go. Alright, so this thick purple dotted line here, that is the 50 exponential moving average. Now, a lot of people ask me a lot of questions. Oh, I use the 200, I use the 20, I use this. I'm going to tell you the ones I use here. Go ahead and try them. If you don't like them, change them. But it's really not the moving average that you use. I found it's the principle behind it, and how you use it is how it becomes effective. I got clients that they use the 12, they use the 13, right? They use the 20, they use all these different ones. It doesn't matter. It doesn't matter the tool. What matters is how you use it, right? So I like to use the 50, right? I like to use the 9D EMA, that's the double exponential moving average. It's very tight. And then I like the 9 and the 20, right, which represents my EMA cloud, right? So going back to understanding who's in control of the market over here on the 1 hour time frame, we have our 50 EMA lining up right here with end of day, right? So that's that blue line is previous day close. That's our pin number. This purple line is the 50 EMA, right? And this is on the 1 hour time frame. So you have to be able to kind of gauge, right, what's the highest probability scenario today, right? And when you've broken bearish structure and you've retested the 50 once and reject it, you retest it twice, you reject it, you're retesting it the third time. See, the mistake I used to make is that, oh, it's the third time it's going to break. No, the third time means it's already previously twice respected the 50. So the higher probability move here is that sellers are going to respect it again. So now I need to be able to do a couple things. When I whip out that 5-minute time frame, right, and we come over here to what the day looks like, I have to be able to understand a couple things, right? Number one is who is in control. Number two, I have to accept, right? Because a big issue I used to struggle with, right, was acceptance. And what that means is I have to be able to go, okay, buyer showed up here off the first 5-minute candle. I have to accept the fact that I might miss a bullish move here to see if that 1 hour time frame trade plan plays out, right? Remember, I'm overall bearish. I'm not just going to long the market because one 5-minute candle. I got to let the story paint. I have to let the market makers do their thing, right? And what that basically means is they need to fake a bunch of traders out. So I need to be patient, right? I can't just go, oh man, we're really large green candle, we're gonna rip today. That's what a lot of traders do, and that's what we call the 90%. Don't do what the 90% does. If you're trying to get the results like the top 10%, you cannot make the decisions that the 90% make. What the 90% do is they rush trades, right? They don't have trade plans, right? They show up to the market 5 minutes before the bell goes off and they just start longing it or shorting it based on the first 5 minute candle. Don't be that guy. Instead, be patient. Ask yourself, which levels do I need to watch, right? And who needs to control them? You can see we got large selling off this 55119 level, and I'm going to show you why that level was so significant. You know what level that was? That was previous end of day, right? Look, this purple line right here, that's previous end of day, which is a pint number. I'm going to throw a little box around it so that it makes it very simple here for you to see. Look at that zone. Completely respected, right? So don't be so eager to long the market when you're in a downtrend. Always watch your previous pint numbers. All right, so then we get very large selling, right? And then when you whip out that 1 hour time frame, once again, you're going to see it really lines up. We're starting to respect that 1 hour 50. So now I'm going to use that selling at the 1 hour 50 here to start to paint that picture. And I'm going to go, okay, what will, in my mind, I go, what will a bearish scenario look like today? Okay, well, I got my bearish target here at 554.90, right? We got previous day low, right? And then below 554.90, we get another one way down here. I think there's another one, but we're just going to focus on this move from previous day low down to pre-market low, right? Or a little below it. So now I'm going to whip out the 2 minute. So the 2 minute comes out. This is now my tool for getting in the market, right? Once again, bring it back. We're intraday day traders, meaning we're looking for that 10 minute to 2 hour move. I'm looking to capture the market imbalance from critical level to critical level, right? So notice, now I'm watching what happens here at open print and end of day, right? So open print established at 550, end of days right here. Now I'm watching price action to see who paints what here. Is it going to be bullish? Is it going to be bearish? Is it going to be a fake out? Is it going to be a bear trap? Is it going to be chop? Is it going to be trending? See, we don't know. We have no way of knowing. We can't predict. We can only react. So now I must watch price action to give me something to react to, right? So price falls, starts to bounce around. Buyers lose open print, right? It's very bearish. What do I mean by buyers lose open print? Well, first of all, price fell below it, right? Second of all, there's no chart pattern here. There was a chart pattern here. It was invalidated, right? So once again, these are a couple ways that I use to determine the terminology that I use, right? Buyers lost open print. It's very important to use certain and specific and intentional terminology when trading, because this helps your brain understand what it is you're actually seeing, right? You have to use the language. The better your language is, the better your understanding is, right? So buyers then lose open print, they lose end of day, they drop down below that 50 EMA, right? It's very bearish. If you start closing below that purple line, that's a very good way to understand the shift in market conditions, right? So price falls down below the 50, and I couldn't get a good entry here. I couldn't get an entry that I was comfortable with good risk. Right, so one of the most important factors of becoming consistent in this game is risk management. You have to have risk management. And the only way to implement risk management is to be patient. You're going to see things that you're going to want to act on, but you're not going to be able to manage risk. According to my trade plan, I need a green bar that gets ignored here to give me my risk. Is there other ways of doing it? Absolutely. Is there better ways? Absolutely. But this is just my repeatable, systematic strategy that I use every single day. Once again, it's how you execute your strategy, which is going to determine your equity curve. Right, so price falls below that 50, right, and I'm still looking for that entry, and now we come down to previous day low. So there's a lot of things you can do or that can happen here, right? You could be like, damn, I missed that whole move, right? And then what'll happen when you say things like that is your brain will start to look for alternative scenarios, right? And alternative scenarios are literally your worst enemy, right? Because what's going to happen, or at least what would happen to me, is I would miss the morning move and I would assume that price must reverse and I'm going to be the one that captures it. That thinking right there cost me so much money, time, energy, despair. It's just so much negativity because I was constantly trying to, once again, predict for something I thought I missed. I didn't miss any move here. Conditions are still very bearish. How do we know this? The 1 hour time frame. If you look at that 1 hour time frame, now whip out the 1 hour. Look at, we're now closing below specific moving averages, right? We're just gonna use this one right here if I can get it. We've now closed, what's this, below the 50, right? Which means sellers respected our bearish trade plan, right? There's a lot of information here still. So don't just think you miss certain moves. Instead go, okay, what is the market telling me here? And where's my next target, right? So I had my target down here at 544.90, right? Now we're coming in the previous day low. Now I need to see who is in control of that previous day low. How do I do that? Chart pattern, moving average, right? We get the GBI right there. That's a green bar that's ignored. We get another one right here. We enter the market short on this candle. Once we wipe out the bottom of this green candle right here, we wipe out, we enter short right here. 54723. We enter the market short and our risk is now above this candle at 54791. We're risking 70 cents here to make a potential $3 move down to 545, right? And once again, the reason my risk is where it is because if buyers can push price above that level, conditions aren't as bearish as I thought, right? So once again, I don't know what's going to happen here. There's no evidence out there that can give me the perfect trade, the perfect setup, and the perfect certainty. You must take the risk, right? Risk is a very important thing. You must be able to manage it. You must be able to stomach it. You must be able to accept it, right? Take the market short, stop above the candle, and notice here, price comes down, comes back up, and retest that area, that zone where the green bar was ignored. Sellers hold it. Sellers confirming that they want the trend. You can see we tested it once, we tested it twice, and we got that large sell-off right down to our target. So guys, what I want you to take from this video is I don't care what your approach is. I just showed you mine. But develop a simple, systematic, repeatable approach that you can execute. The sooner you do this, the sooner you will reach consistency. Hope you guys enjoyed this lesson. Make sure you hit a like, drop a comment. Until next time, stay blessed. I love you. Have a nice day.